Well, August could be the lowest prices we see in real estate for the next several years, maybe even the next decade, as the financial markets are getting crushed, interest rates are coming down, and even though our Fed, Jerome Powell, just met a week ago and said that he was going to pause on changing rates, there's a 95% chance he's going to be starting to lower those rates, maybe more than many expect, in the coming months. My name is Chris Lamb. I do lending in 40 states. And if you're watching this video for the first time, please make sure to subscribe, like, or drop a question in the comments. But I want to jump in and cover what's been going on because it's been a crazy week in the financial markets. Now, the first thing we want to talk about is the Fed. Interest rates have been elevated because of the Fed's policy of raising rates to try and curb inflation. All along the last 20 months, he has been saying every single the meeting they have once a month that they're waiting to see key indications that inflation is coming down and the economy is weakening. Well, last week, we had three of the biggest reports that they use as the data to make those decisions come back worse than they expected. The last one and the most important one being the unemployment rate coming in at 4.3%. As a result of that, we have seen the stock market completely sell off. We don't know how long this is going to go, but historically, right before election, when these things happen, they can have some legs on them. And as a result of that, the bond market has seen a lot of new money flowing into it, which is causing the 30-year mortgage rate to go down to the lowest level we've seen in over a year. So it's a very exciting time because no one really knows which way this is going to go. But here's what most believe is going to happen. We will continue to see mortgage rates come down slowly over the next 6 months. More activity and more buyers will step into the market to purchase an already really undersupplied housing market, pushing prices higher. And so wait for it. I do believe we're going to see home prices go up in the fourth quarter this year. So I want to talk to you about a couple other things, you guys. We're going to keep you posted on what's going on with interest rates. I also want to talk a little bit about a brand new loan program in California called Recover California. Now, this is a really amazing program that's specifically designed for people who lived in one of the fires in 2018 or 2020. Now, I will put some links in the description so you can see more about this. I'm not going to cover the whole thing in the video, but for someone that rented a home or lived in a home or even lived in one of the areas that was evacuated, that was a high-risk fire area during the incidents in 2018 or 2020 in multiple counties in California, specifically Shasta County where I live, both years, you may qualify for up to $350,000 in down payment assistance money that is forgivable after 5 years. That's right, I said forgivable. It is basically free money that many people can get their hands on if they can prove that they lived in a home, whether they were renting, living with their parents during one of those incidents. This is something that you really want to know about. If I were hearing about this, I would tell anybody I know about this as well. This is a phenomenal opportunity that some people are going to get to take advantage of. Now, I want to talk a little bit about the election. We're heading into November, and as everyone knows, it's a very contested election this year, and a lot of people are kind of waiting to see what they think is going to happen. The truth is, regardless of what party gets in, the Federal Reserve is going to cut rates, and we are going to see more people stepping into the housing market. So for people that have been trying to time the market to buy a house, I'm just going to go out and tell you the time is now. If rates go down by another 1%, there's going to be 100,000 more people in the housing market. I'm just pulling that number out of a hat. It could be more than that. And I will tell you that that is the same thing I've heard from lenders and realtors across the nation. They have hundreds of people that are pre-approved to buy a property that are just sitting around waiting for something to change. Lower interest rates will be that thing. So if this continues and you or someone you know has been on the fence, you may want to revisit your numbers and kind of see where you're at, because once this thing gets up and going, it's going to be, from my perspective, a very unhealthy housing market. I wish that wasn't the case, but that's just what we're dealing with. Now, for people that bought a home over the last 2.5 years that have rates over 6.5%, this would be a good time to consider a refinance. For people that are paying mortgage insurance and have a higher rate, you might be able to get rid of the mortgage insurance while lowering your rate at the same time and get some substantial savings on your monthly mortgage payment. We also have clients that have a little bit of higher rate that have a lot of equity, but you got into some credit card debt. We have a lot of people taking advantage of today's rates, lowering their rate, taking a little bit of capital out at a lower rate and paying off higher interest rate debt. So I'm going to put my email and all my information in this email, but if you ever want to run scenarios or numbers, feel free to reach out to me anytime. I hope you and your family are doing well. Thanks so much for watching this video. We'll see you next time.